Bada 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 boo. Alright, it's 12 o'clock Eastern Time here on June 1st. Wait another 30 seconds or so and we'll get started. Alright, let's do it. Like I said, 12 o'clock Eastern Time here on Tuesday, June 1st. I hope everyone enjoyed their Memorial Day weekend. This is the Prop Trader Market Update, hosted by me, Derrick Smith. I am an associated member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. you should carefully consider whether trading is suitable for you in light of your own financial condition. Here is my position disclosure. Again, 100% long here for another week. A couple positions have come in and out of since last Tuesday. I think I might have been in that TIGR last week for a nice trade, out of it now. But added some trades on Mara, BNGO, Sundial. I can talk about those in a little bit. Quickly about me. So right now I'm talking to everyone from Buffalo, Wyoming. I am back in Buffalo, Wyoming. It's good to be here. It's beautiful. I got some great hiking in last weekend for Memorial Day weekend. And I am on my way back to New York City to start being in our office in Manhattan for the first time in a year and a half. So this is going to be the last broadcast that I'm doing on a remote basis. It's been a heck of a year and a half, from upstate New York, Chestertown area near Lake George for a bunch of months, then out to Long Island June of last summer, June 2020, then spent all of last summer, July, August, here in Buffalo, Wyoming, where I am again now. Continued to Big Sky, Montana, Jackson, Wyoming, Wilson, Wyoming, Victor, Idaho, then to California with a little stop at Salt Lake on the way over. Spent the beginning of winter in Lake Tahoe, got ski season started there. Went back to Victor, Idaho, where I got to ski Jackson Hole and Grand Targhee for the second half of winter. And just about a week ago, I came back here to Buffalo, Wyoming, because I made some great friends here last summer at the rodeo, and figured we would do a week here and get to spend Memorial Day weekend with them. I just, for lunch, made myself some chicken eggs that I had just last night, taken warm right out from underneath the chicken. What an incredible experience for a guy from New York City to be able to do things like milk cows and take chicken eggs from chickens and put the longhorn cows back into their pen that they belong in. Just been an incredible year and a half for me. And now next week, when we do this weekly update, I'm going to be doing it from New York City again, where I've lived for a long time. So that's the background of the last year and a half. You guys have probably been following along with my weekly webinar for a long time now, so everyone should know the rest of the story there. Here's my email. Today I'm going to be talking about markets like usual. Obviously, it's the weekly market update. Also going to be talking about T3 prop trading, how you can get involved with us and have your trading with T3. If anybody has any questions, email me. Here's the email address right here, and it'll come up again at the end. So with that said, let's go to the charts. All right, here is my 5-minute chart of the SPYs from yesterday into today's large gap up, which has been sold. But let's take a step back. Everything I do, for people who have ever participated in my virtual trading floor, if you've been following along in these weekly webinars, everything I do is big picture down to small picture. I really think that even if you are exclusively a day trader, it's still the right approach to go from big picture to small picture. You always have to have an understanding of what the market itself is doing, how it's set up. One of the very broad ways in which I like to view the market is I look at the S&P, I look at the NASDAQ, and I look at the Russell 2000, and I ask myself 3 questions. Technically, is this index bullish, bearish, or neutral? Go through all 3 of them. And if all 3 of the indices are telling me, hey, it's bullish right now, well, what does that mean? It means I probably don't want to be doing a lot of short selling. And if all 3 indices are telling me it's bearish, well, I probably don't want to be doing a lot of buying unless things are getting really extended to the downside. We can look for some sort of counter trend, retracement, downside capitulation type trade. For the most part, the trend is your friend, and whichever direction the market's working is the side that you want to be on. It's the easier money. And then sometimes the market's neutral. Well, if the market's neutral, that's when money rotation, relative strength, relative weakness becomes really important. You can be long and you can be short, depending on that money rotation and that relative strength and weakness. I've been hearing from a lot of people about how hard 2021 has been from a trading year. It hasn't been hard. Let me just say that. I'm just going to simply say it. 2021 has not been hard. I have experienced more difficult years than this over the course of my trading career. It's just difficult compared to 2020, right? 2020 was this year where first you had the big down move from the crisis, and then everyone starts getting involved in the markets just in time for markets to rip higher. And obviously, if you look at the S&P here and you go back to that coronavirus low, it has been a heck of a move from a low of about 220 to a high of around 420 where we are now. And you can see that the last couple of months we've just chopped around and gone sideways. That's not necessarily a bad thing, but you got to understand every market environment is unique. Not always do you get a market environment where things are going straight up and individual stocks go up 300, 400, 500% in short periods of time. If anything, that's not normal. It's very unusual. It's much more likely for markets to kind of ebb and flow, and for the characteristics of that market to change over time. And you just have to be able to adjust your trading to whatever that new normal is, constantly and consistently over time. And that's the hallmark, one of the hallmarks, I think, of a successful trader, is the ability to adapt to whatever the market environment is that you have in front of you at that time. And this market environment here for 2021, these last several months, has all, it's been entirely about understanding money rotation and relative strength and relative weakness. That's been the key to it. You know, if you got out of the way of those high multiple names, those plugs and those fuel cells and Jumai and things like that, if you got out of the way on those when the trend broke, if you got out of the way quickly, if you respected your stop losses and your risk management, you didn't have to deal with any problems when these things were down 75% from their highs for a lot of them. And if anything, for anyone who was in my open house that I did 2 weeks ago, we nailed the bottom on these. We got out of the way on the move down. We focused on the money rotation that was going into XLE, that was going into XLF. And then we recognized, in the exact same way that we recognized that a lot of these stocks, and Jumai just happens to be the one that I always go to, but I have a list of about 20 of them. If you, in the same way that we were able to recognize that this was not healthy, that these moves higher were bubbles, they were literal, and I was talking about it here in the weekly webinar at that period of time. We had all these little bubbles in the market. I don't think the market as a whole was in a bubble, but you had a lot of these stocks that were having these little bubbles where these moves were unsustainable and unhealthy. There were so many of them that literally went up 300, 400, 500, 600% over the course of October through January, February, and that's just not how markets work. You know, these stocks went completely parabolic, and then they had massive pullbacks. And I know a lot of people are frustrated that these stocks were, you know, going down so much and the S&P was holding up. But again, it's about understanding money rotation. The money rotation came out of these stocks, interest rates started to move higher, and money went into things like energy, which is also having a really strong day again today. And then we finally realized, in the same way that this was completely overdone to the upside, that this day here, May 11th, kind of brought the market to the opposite side, where things were overdone to the downside. And I wasn't at this time calling for a complete reversal, but on this day and over the course of the next couple of days, my team and I were heavily focused on now actually re-entering into a lot of these stocks. Initially for retracements higher, with the understanding that you can have rules in place for when a retracement higher becomes a reversal. And that is exactly what happened. You know, we're able to get into, you know, Jumai and Neo and, you know, for me, this Sumo, and for other people, you know, getting back involved in like a plug and those types of names. I do not think that these stocks are going back to their January, February highs, because I don't think that they belonged there to begin with. But it doesn't mean that some of these names can't have healthy retracements back higher, short-term reversals back higher, that bring them back to some previous levels. It's not out of the realm of possibility for me to see a stock like Plug, which I've never been a big fan of this company, but it wouldn't be outside the realm of possibility to see this thing work its way back up to $35 or $40. And we were even saying that down here at the lows. Well, guess what? You know, you catch Plug here at 20 bucks, you get a move to 35. That's a heck of a move from a percentage basis. You could make your year on that. But if you've been bag holding the whole way down and hoping and praying that these things are going to come back up and you do not have risk management in place, well, that's not the appropriate strategy that's going to lead to long-term success. So money rotation has been the key to 2021. And if you understand relative strength and relative weakness, which is one of our important layers of probability, and you understand money rotation, which is something that my team and I talk about on a day-to-day basis, then you got out of the way on these things and you started to get involved potentially in material names, energy stocks, which have been performing really well. We had another really big gap, we had a large gap up again in the XLE. USO is up a lot this morning. Does anyone remember when oil went negative? It was like one of the craziest side effects of the coronavirus market breakdown. Oil was negative, and now I'm a little bit upset because I got a huge drive from Wyoming to New York City this weekend. I'm doing it over the course of 3 days, and I'm going to be paying more at the pump than I would have had to have paid at any other time in the last year and a half. But it is what it is. It's market dynamics. And also with that inflation factor coming in, you know, we're seeing copper at all-time highs. Everyone talks about how lumber prices are at all-time highs. And guess what? Right now the trend for oil is higher. So the trend is your friend. And while that trend is higher, the smartest thing you can do is just expect continuation. So this morning, one of the big ideas for the team was to come in and buy Oxy off the open versus yesterday's high. A lot of these names had tight inside days yesterday. As a matter of fact, we had actually been talking last week about being long a lot of these oil names and material names versus the lows that were put in around, you know, May 13th or so. So a bunch of people are already involved in them. Again, understanding money rotation, that this technical pullback at a certain point became viable. And then today gave a great opportunity to either add if you're already involved or to enter a lot of these names. Oxy on this big gap up here with the tight inside day. DVN, we were looking at. DVN caught an upgrade this morning. Buying DVN off the open or even pre-market when you could have gotten a little bit better prices versus yesterday's high. We spoke about ExxonMobil. Also, same situation. Breaking higher off the inside day after forming a base and a pullback. These are all names that we're going to today. So energy was definitely a big focus for myself and for my team this morning. And the biggest disappointment for me, honestly, was the market today. If you go back to the SPYs here for a second, like I said, everything I do is big picture down to small picture. We had this beautiful move. If you guys remember last week, I spoke about the importance of this day here. May 19th was such an important day for the market, both from the perspective of technicals and fundamentals. This day marked a huge change in the dynamic of the market for the SPYs and especially for the NASDAQ. Why? Because if you look at the NASDAQ, the Qs here were in a short-term downtrend. It should have been a lower low on this day. It wasn't. It was equal lows. Equal lows represents what we call a trend that is being challenged. So we had this short-term downtrend here for May that then got challenged. We were buyers this morning into the degree of the gap down, buying that dip, and then something really important happened at 2 o'clock on this day. The Fed minutes came out, and they mentioned tapering. Just the mention of the word tapering should sink the market. What happened? Market closed at highs. That was a signal that not only we're getting a technical change from the market, but we're also getting a qualitative fundamental change from the market. And we can start becoming more bullish again. Whereas otherwise, into this area here in mid-May, beginning of May, we were more neutral. Meaning you could be short, you could be long. It goes back to relative strength and relative weakness and money rotation, like I was talking about earlier. And then this day just marked a huge technical change and fundamental change for the market. The tapering word got announced by the Fed minutes at 2 o'clock, yet we closed at highs. That was the signal. And that was a signal that you could continue to even buy that next morning. So after a really big 4-day move, we spent all of last week, which was a holiday week, resting. I love when the market goes sideways sometimes. When the market goes sideways, when things are otherwise bullish and they digest gains, that's actually a really good, healthy sign for the market. So we had 4 days of rest here after we had gotten extended. I remember just last Tuesday when we did our weekly webinar talking about how incredible it was that we went from really oversold here on May 19th to overbought on the open of May 25th. Just 4 trading sessions in the morning, we went from oversold to overbought. Now we've digested that for 4 days. I'm disappointed about today because I wanted to see if we could get some sort of continuation from the market, and we're not getting that. So today we had a common gap to the upside. So gap analysis is a huge part of my trading. It's a huge part of creating my game plans that I do for my entire team on a day-to-day basis. So today we had a large common gap to the upside. I think it was about 0.5% in the S&P. So even though I'm feeling a lot more bullish than I was because we had 4 days of rest here after that big up move, and that's it's a bullish consolidation. That's what I want to see. I also recognized you don't want to chase common gaps. Common gaps tend to get filled. Okay, common gaps are sometimes also referred to as area gaps. Basically, a common gap is a gap that occurs within an area of previous price congestion. So usually what this type of gap leads to, again, I'm back to a 5-minute chart here, so you can see this is Friday's close. This morning's open is all the way up here. You almost can't even see it on this chart because the gap was so large. Common gaps tend to get filled back down exactly like this one did, which is why we don't want to chase big gap ups in the morning. So what I was telling my team this morning from a big picture game planning perspective, it's all right, this market's looking a good bit more bullish, but we got to be patient off the open. We're not chasing this gap. Let's wait and let's see how the market handles the upside extension from the gap. Does it go sideways up here and let these moving averages, I use an 8 and 21 EMA as the space that represents technical equilibrium for any stock chart that I'm looking at? Is the market able to go sideways up here and these moving averages catch up? That would be extremely bullish. Does the market sell off and then try to create a pivot into that equilibrium area or at the gap fill? In which case, okay, we got to be patient off the open. We don't want to chase the gap up, like I said, but we know the big picture of the market's gotten more bullish. Let's be patient and let's wait for the setup to come to us as a signal to potentially put some longs on. So that's what we were looking for this morning. And then market sold off, filled that gap, no big deal. Attempted to create a pivot here at 9.55. Filled a large percentage of the gap, got into the moving averages, put down this little tail here on the 5-minute chart. This right here was a signal to start looking for longs. And guess what? The signal failed. That happens in trading, and this is why we manage risk. We understand from a probability perspective, okay, big picture, this market's looking a lot more bullish here. We're a hair away from all-time highs in the S&P. At the same time, game planning, we don't want to be chasing big gap ups in the morning. So let's be patient. Let's wait to see if a long signal comes in. Why am I looking for long signals? Why aren't I just shorting this open? Because of the big picture. The big picture is too bullish for me right now to really consider doing much short selling. What I want to be doing is I want to be going long the names in the sectors that are most relatively strong. This is different, by the way, than energy, which we did want to buy off the open because of the degree of strength of the sector overall, the money rotation, but you needed to still give it the right amount of room, which would have been to yesterday's high, right? So market here pulls back, SPYs try to create a pivot. This is a great spot to come in and do some buying. And guess what? It fails. So you get out of the way. New lows come into the market here at 10.10. You're out of the way. You lost your risk. From a risk-reward perspective, if you were coming in and you were buying off this candle, well, one of the big things I love to do that I emphasize to my team all the time, what I'm trying to do as a professional trader from a risk-reward perspective is find small time frame risk for big time frame reward. right? So if you're buying off this 5-minute candle low here because the market itself is so bullish, you have 5-minute chart risk. But if this creates a pivot and we work our way higher here and we break highs of the day and we close strong today, you're potentially putting yourself in the position for big picture daily chart reward. You do it like that, your risk-reward ratios are going to work out. The numbers are going to make sense, right? Everyone always talks about, what risk-reward ratio they're looking for a trade: 3-to-1, 5-to-1, 10-to-1. All those numbers are great. Personally, what I like to look for is unlimited reward for my risk. If you're buying a stock at all-time highs and it's trending in your direction, in theory, you have unlimited reward potential for the risk that you put on. So, you because the big picture is bullish, you are patient off the open, you're not suffering through this down move, you take a little trade here on smaller time frame risk, and guess what? It doesn't work. That doesn't mean it was a bad trade, right? We work in probability. And when you're working in probability, that means that literally anything can happen. But we want to put ourselves in the position where the risk, reward, and probability of success lines up in our favor so we can be consistently profitable in the long run. That's exactly what we're doing. So you come in here and you put on this 5-minute chart risk and you get stopped out because you put yourself in the position for daily reward and you lose a few dollars, congratulations. But if you are chasing the common gap off the open, you don't have a risk management game plan in place, you're not getting stopped out, this thing's breaking down, your heart's starting to race, you're hoping and praying, that's not the right approach. That's not what we're trying to do as professional traders, right? And then pretty quickly here at this failure, I started telling my team, guys, unfortunately, it doesn't look like today's the day. That's the message that the market is telling me. The market tried to pivot, it failed. It completed the gap fill, tried to pivot again and failed. And now it's getting later into the day. I don't like adding on a whole lot of new positions at 12 o'clock Eastern time at lunchtime. That's why I do the webinar at this time, because there tends to be much less opportunity. And the market just said, you know what, today's not the day. And we'll see what type of damage we get. We'll see how we close. I'm not expecting that today is going to lead to a full breakdown. It could, again, probability. It would be lower probability that today leads to a full breakdown in the market. But it's definitely a little bit disappointing that the market wasn't able to pivot and start to give some sort of bullish continuation outside of the big picture bullishness that this chart has created, right? My spies here are back in full bull territory. I've been talking about that above 416. 416 was my kind of line in the sand where we would go from neutral to being back to bullish. The Qs here, it's been 334, which is now kind of turned into the area between 334 and 335. We gapped up above 334 today, and that failed. It wasn't ready to go yet. So Qs below 334 are actually still kind of what I consider to be neutral territory. So you could be long, you could be short. And the IWM last week got back above 225 on a closing basis for the first time really in all of May. 225 has been, again, that's the spot where I'm going bullish on IWM. And it's not unusual then to see that a lot of these other, small stocks that are so beaten up, like your Tilray and your AI and your Plug and your, Triple D, it's not unusual to see that these stocks now started to perform a lot better as the IWM has gained its relative strength. So again, that's been the key to this. I really do not think that this has been a difficult market in 2021. But I speak to a lot of people who are retail people who are interested in possibly going professional, who are just like, oh boy, I don't know if I want to go professional because the market got so much harder. If anything, that's all the more reason to go professional, so you can become part of a team that potentially has the ability to recognize all of these dynamics that I'm talking about. And if you're part of that team and you're understanding money rotation and you're understanding relative strength and relative weakness, 2021 has not been a difficult year because you got out of the way of all the high multiple names back in February, March. You potentially got back into them a couple weeks ago, basically at their lows. And you've been fine with the relative strength that's coming out of value names, it's coming out of energy names, it's coming out of material names, and you've been involved in those to go for the ride as well. So if you're implementing all that, if you're part of a professional team, if you're part of a strong group, I really don't think that 2021 has been a difficult year, despite what I'm hearing from other people. So that's kind of where we are with the market. We've got XLE taking off again. We've got the SPYs, Qs, IWM looking a lot more bullish, though today, in my opinion, is without a doubt a disappointing day. We've got a lot of those other types of beaten down stocks that have started to turn around a little bit. As far as other new kind of positions, first of all, we've seen the Wall Street bet stocks wake up again, right? GameStop, AMC I was shorting on Friday, was able to do pretty well with it. I talked about possibly reshorting it at 32 today, decided not to do that, taking a half step back. It happens to be at 32 is the high of the day today. My alert was going off in the morning meeting to potentially short 32, but I'm going to stay away from that. I don't think AMC belongs at these prices. I think it's ridiculous that it trades up here, but it doesn't necessarily mean you can just kind of blindly short it because there's so much momentum. I did get into this Sundial, which is another Wall Street Bets type name. One of my traders on my team, and again, this is why it's important that we have such a strong team environment, was saying back on this day, on May 25th, basically saying, look, the Sundial's at like 75 cents. Wall Street Bets is starting to come back into play a little bit. I think it's worth it to get involved in this cheap stock because, worst thing that happens, Wall Street Bets doesn't come online. You lose 5 or 10 cents in this really cheap stock. Best case scenario, Wall Street Bets comes back online, and potentially this thing could double in a really short period of time. So I got involved in that one off of his idea. So far, so good on it. Given some continuation. I haven't sold any yet. This is the type of thing here where I feel like my risk is more or less covered, and I just want to see if this can lead to a real big speculative move. I remember being involved in this last time and getting out of it really relatively quickly and not having any stock up here at $3. Again, not that I'm saying that I think it's going back there, but I'd be pretty happy to get a move back to this 150 area where there was some price congestion from March when it came back down. So I thought that was a pretty good idea from a risk reward perspective. I added Coursera today. I've been in this Coursera. I did really well with it on the IPO. I like the idea behind this company as a potential education disruptor, which is a big thing right now. Almost every industry that's out there has been disrupted except for education and healthcare. And college prices just keep going up and up and up and up. And as much as I got a great education when I went to NYU, I was fortunate enough to go on a scholarship, so I didn't have to pay, full tuition there. Paying whatever that cost is, like $65,000 a year or something like that to go to NYU is absurd. Education, I don't think is worth that. It's not worth being, $250,000 in debt after 4 years when you're 18 years old. So I really like the idea behind this Coursera. Did really well with it off the IPO day. I got all out of my position, I think at about 55 into this up move. I got back in small kind of on the way down. And then what happened here is in May, earlier May, they had a lockup expiration on 25% of the lockup. Normally it's, I think, 6 months to a year on when the restricted shares from the lockup become unlocked. But in certain circumstances, they can start to do some early. So I think 25% of the locked up shares actually got unlocked here on May 11th. So they sold it off, as is common with lockup expirations. They sold it off very heavily for 4 days into the lockup expiration. Actually bought it up on the day that the lockup expired. And then this chart's gotten very tight. And what I've seen in the tape is that there's been a large, consistent seller in this thing who's just been sitting on the offer. Most likely this seller is actually a result of the lockup expiration. Maybe it's an insider or something like that who is kind of cashing out on some of their stock. Congratulations to someone who is a employee or executive at Coursera over the course of years and turned it into a great company. And now you're reaping your reward by being able to sell some of your stock. What I like about this thing now is this expiration is almost a month behind us. The chart's gotten really tight here, and I actually really like on Friday, it just had a breakdown failure. It tried to be very weak early on. It tried to break this thing down, and then it closed strong. So I added to my position on this today. It's a little bit of a bigger picture trade, and I want to see if it can start clearing out these resistance areas, which is kind of between 39 and 40.50. If it can do that, I think that there's a good potential upside here. So I'm looking for a move back to $50 in this Coursera if it can actually break out. So I added a little bit on that, showing decent relative strength. I like the idea behind what the company's doing. So that's just some kind of position updates for me. I got involved in this Mara last week on this day here. I think it got initiated with a buy by someone. I don't think I've ever actually traded the stock before. It's one of these Bitcoin ones, along with crypto stocks, along with like a Riot. Also really beaten down. A lot of these names again are down 50 to 75%, and kind of put lows in here in mid-May, which again, my team and I were able to catch that really well. So I got involved in this on the inside day and up, along with the initiation, the upgrades. I'm kind of managing that position a little bit. I want to see if I can get a move to maybe $30 on this on the upside. And from a risk management perspective, I'm still kind of using my stop loss as day low here from the inside day. So it's just some position updates for me on some of the things that I'm involved in and trying to get some follow through on. So anyway, I guess with that said, let's talk a little bit about prop trading with T3 Trading Group. So T3 is one of the largest prop trading firms in the United States. We have hundreds of licensed professional accounts. We have 4 physical offices, including our New York City headquarter office in the Financial District, where I will be back there on Monday, June 7th, a week from yesterday. Back in the Manhattan office, back on the desk for the first time in a year and a half. Should be exciting. I hear that New York City right now is popping, that people are just excited that it's getting, everything's kind of getting reopened, and I saw, my VTF, we do a really good job of getting the news posted there in real time. I saw a news hit in the VTF at one point today that I guess new cases of coronavirus in New York City hit a post-pandemic low. So really excited to see all that, excited to be back in New York. But guess what? We have remote traders throughout the United States. I've been remote for this year and a half, traveling everywhere. It's been an awesome experience. And even though I'm going back into the office, we're not really reopening the office yet to traders. So right now everyone's remote, everyone's working through the virtual trading floor, and it's actually been excellent for the team. So if you do want to become a professional trader at T3, you have to become licensed, because T3 Trading Group is a registered SEC broker-dealer and member of FINRA SIPC. We're regulated. That means you got to be licensed. You got to pass the SIE, Security Industry Essentials examination, and you've got to pass the and you've got to pass the Series 57, which is the Professional Proprietary Traders examination. Those are the tests that you got to pass. We'll sponsor you for the exams. We provide study materials, so just reach out if you want to get involved. You do have to pass those tests. If you don't want to deal with passing the exams, which I totally understand, because it's probably the biggest downside, in my opinion, to becoming a professional trader, is you got to get through these tests. So if you don't want to deal with that, well, you could become a retail trader with T3. We have retail trading available as well. So if either of that interests you, reach out to me. When the Series 57 is passed and you're fully licensed, then we can get started with trading. We have 3 different trading software options for our professional traders. Actually, it's 4 now. We added a new one. We have Lightspeed, Sterling Trader Pro, Wolverine, and Realtic. Personally, I've been using Lightspeed for over a decade. I usually recommend that software. Sterling Trader Pro is great as well. We have equities trading. We have equity options. We have futures. We have options on futures. If any of this interests you, reach out to me. Again, my email address will be at the end, and I'll either speak to you about it myself or set you up with someone else to chat about it. And even though we do have equity options, I don't personally trade them. I am specifically an equity trader. We do have options traders who are part of my group. They're primarily focused on complex option strategies, spread trading, things like that. Not so much directional trading. I think directional trading options makes a lot of sense if you're in a retail account, because of the natural leverage that's inherent in the product. But for me as a prop trader, T3 gives me as much capital as I could ever want. So my thought process has always been, why do I want to trade a less liquid product which is subject to time decay just for capital access when I already have as much capital access as I could ever want inside the equity market itself. If you're a new trader, if you're just thinking about getting involved in trading for the first time, T3 is a great place to get started because of the training and development that we put together. We have extensive free training and development for all the professional traders of the company. Everyone has access to it. Experienced people who are getting started and new people who are getting started. Daily morning and afternoon meeting, 1 month training program. You'll have access to all that. So it's a great way to be able to get started instead of trying to figure things out on your own. When you do get your account open after you pass the exams, you will have to fund your account with a capital contribution. And what we do typically to get started is we provide capital access at 20 times your contribution for equity day trading, 8 times your contribution for overnight positions, and then you're compensated through a profit split. So for example, someone who puts $50,000 into a professional prop account, we basically start by allocating you $1 million to trade with, and you'd have access to $400,000 for overnight positions. So, the capital access for me is huge. It's without a doubt a double-edged sword. It makes risk management and money management even significantly more important, but it also opens you up to certain types of trading strategies that are really not possible in a retail account. I don't think personally I could ever go back to trying to trade a retail account and doing that as a living after having been a prop trader with the capital access that I have for as long as I've had it. And if you're an experienced trader, it's also a great place to be. You can utilize our balance sheet for your trading. If you want to come in with $1 million because you want access to $20 million, it's not a problem. Here's my email address. Reach out to me and happy to chat. And you get all this free stuff. You get the Pro Desk virtual trading floor, which is the one that I run, daily morning and afternoon meeting. It's a very professional environment for free. You get access to Redler for free. You get access to my training program, which isn't even on here, for free. It's like probably $6,000 a year worth of stuff. And we give it to you for free just because we want you to be as successful as possible when you're part of our team. You're part of our team. If you can be successful, if you can be a trader who's with us for a decade, it becomes a win-win situation. You're making money, T3 is making money, everybody's happy. So that makes us happy to give away all this stuff for free because we're thinking in terms of the big picture. And once again, here's my email address. So if you want to chat about anything, if you want to meet up with me once I'm back in New York, it'll be the first time I'm able to do that with certain people in a while. If you want to get involved with T3 as either a professional trading account or a retail trading account, if you want access to the Pro Desk virtual trading floor, which is where most of the pro traders at T3 are hanging out, here's my email address. Reach out to me, and I'll either put you in touch with the right person to speak with you or chat with you myself. And that's pretty much it, even though today's been a little bit disappointing from the perspective of the market because just no real bounce in sight, kind of a potentially strong day off the open that is failing a bit. There's still been some really good opportunities out there with some of the energy names and some of the other names that we were able to identify as a team in my morning meeting. So I've got 18 positions on or so. I'm going to jump back into managing them, and I hope everyone has a great day, a great week, and I'll see you all on Tuesday of next week for the weekly webinar where I will be coming to you from our New York City office for the first time in a year and a half. See you then, and have a great rest of your day, everybody. And remember to manage your risk, because that is always the key to successful trading.